Hey everyone, Craig Gordon, Vice President of Prevail, and I'm joined by our President, Andrew Stafford.
We're back. It's been a few since I've been in here.
It's been a little bit. It's always good to have you back in the saddle.
It's good to be back. I've been busy.
So, Andrew, I want to kind of talk a little bit about the bull and the bear.
Yep.
Obviously, there's always a dynamic. We've been in a run. We've been in what I would call a bull market, certainly. There's some pressure building on that. You're seeing it in kind of some of the data. You're hearing it maybe more so in some of the rhetoric out there. What are you seeing? What are the data points we're looking at? What are the discussions that we're having right now? And what's our kind of our overall outlook?
Yeah, I think it's a good question because, man, the market has been kind of crazy with the ups and the downs. But we've talked a lot about that before, and I think that's
well,
the new norm.
Probably, right?
I think that's the new norm. You know, as our investment advisory committee meets, we look at several indicators. We kind of have a bull versus bear indicator list of about 11 items. Right now, 9 of those 11 are green. So what that means, you may look at it and be like, oh, that's all on. No, that's actually what I would say cautiously optimistic. And it's interesting when things are going as good as they are now, it's almost like you need to be a little bit fearful. I'm not sure if that's the case, but what I will say is there's some things that we're watching and monitoring. So a couple of things off the checklist. And I'm going to, for our audience, I want to make sure I get some of these things right because it's more technical in nature. But as you look, one of our indicators is the S&P, the SPY, some of the indexes. January AVWAP, meaning anchored volume weighted average price. We're above that. And what does that mean is if anyone were to buy in at a certain time of the market prior to now with average weighted volume, are they still ahead? And they are. They're positive, which is
strong.
That's a really, really good sign. It's also good because we're looking, the market is starting to broaden out. We're seeing small caps are outperforming large caps.
It's not concentrated,
it's
right?
not
like
concentrated.
It was last year.
100%.
Huge concentration.
And we've gone through these times in the market where it was very narrow, the Mag 7, meaning the top 7 holdings in the S&P 500, they were basically kind of leading everything. When we look at some other data, the COT, think of that as the commercial institutional buyers. They're still long the S&P 500. Our banks are starting to test all-time kind of resistance high levels that they've had, not all time, but in the last couple of years. Banks have to do well to keep the bull market going. So there's a lot of positive things that are coming out of this. Now, what I will tell you, there's some caution here too. The dollar is strengthening. And so as we look at the dollar strengthening, we have to be cautious about that. That makes all things that are purchased outside of America more expensive. And so you would logically think a strong dollar is really good, but when we're thinking about imports and exports, that matters. And so we're good to have it within ranges, not good to have large breakouts. So watching the dollar, banks are improving, long the S&P 500 or the markets, but technology is still leading everything, right? So when we look at technology as a sector has led the last 10 weeks. So technology has led us into bull markets and it's led us into bear markets. What I do think is really good about this particular environment is it is spreading out. So we are seeing more and more of the overall market doing better. So in short, and to kind of land the plane, we're getting ready to go into the summer months, which are always volatile. So I don't want our discussion to be like, oh, well, it's going to be great 30 days from now. It's going to be great. I'm more talking about the rest of the year. And so we're going to experience the seasonality that we have through the summer months. That being said, all indications right now is the underlying market is still pretty strong. And so I think, like we always say, we're cautiously optimistic. Where I love what we do is our ability to rotate sectors in the market. And looking at what is the next sector. And financials and banks is one of those that I think have an opportunity to run because they have not run like the rest of the market.
I mean, when you look at kind of the past and you had so much concentration and it was driving the overall market, now you have, to your point, a lot broader base here to go out there and look at it. I think it's a great time to be in the advice-giving business.
It is.
I think we're in a great spot to create impact for others. And if you'd like to learn more, check us out at PrevailIWS.com.